though rest of your classes would have been cancelled in this time. So are rest of them joining? Bhaskar himself has not joined. Oh yeah, Bhaskar is here. Yeah, you are here. So are the rest joining? Okay, thank you. So last class we had just initiated the various dimensions of which caters to the measurement of money. So when you consider money, it is somewhat created from the very basic
Recording in
foundation.
progress.
So we begun with M0, which is considered as the monetary base, comprising of the cash, the currencies, which is in circulation in the economy. Then we moved on to adding up to the foundation. So along with the cash and currencies, it also includes the deposits which are held in the form of currencies with the banks. So that is what your M0 form of. As we gradually moved on to M1, it had one more addition. So M1 was M0 along with OD, which is your other deposits. So other deposits are essentially those deposits which are taken up with RBI, and the banks, like the commercial banks, have their deposits with RBI, institutions have deposits with RBI, independent central bank of other countries, they also have their deposits with RBI, along with the deposits with IMF and World Bank. So all those things will category into your OD, which is other deposits. M2 was M1 along with the saving deposits of the people with the post office. And yesterday we discussed what is the relevance of post office savings and how gradually the post offices has been converted into post office saving banks. M3 was termed as broad money, which includes M1 along with time deposits with the bank. Time deposits are subject to a certain time limit. Along with that, we also included your international currencies, specifically considering that your euro dollars. And M4 was M3 along with the total of, that is, post office deposits. So this total post office deposits not only includes the time deposits, but also the saving deposits. And we ended with a very important question that why do you notice that the gap between M3 and M4 is slowly it is disappearing? What is the reason for that, right? So with that, we ended our session yesterday. So yes, why do you notice that the gap is eliminating? What is the cause for that? Why do you find that just in the recent past, whatever due to certain occurrences, the gap between M3 and M4, it has slowly, it has declined. Or you may say that the gap has been mitigated or it has disappeared. Why?
Because of the decline in the deposits in the post office banks, postal banks, and as there is a less amount of interest given on the deposits, so people are not interested to put their savings in postal banks. So there is a decrease in the gap. This lessening.
Exactly. Okay, so willingness of an individual to have a deposit is the amount of interest which they carry along with that. So since last couple of years, government have reduced the rates on savings. that has somehow it has caused a sense of disinterest among the individuals to come on in with this deposits in the form of saving deposits. So that is why you find that slowly and slowly the gap has minimized. So there is, as such, technically you can say that there is no difference between M3 and M4. More or less, they are the same. But still M4 is considered as the broad money. M3, M4 are treated as the broad money. The earlier are the narrow money. So the determinants of money supply has major two factors through which it is affected. One is the reserve money, or you consider them as the high powered money. Another is the size of the money multiplier. So size of the money multiplier means what? To what extent, taking all those measures of money supply, to what capacity they have the power to multiply. So the multiplier effect of money is what is money multiplier. So if your size of the money multiplier is high, money supply will be more. If the size of the money multiplier is less, the multiplier impact will be less. It also depends upon the reserve money, and we will see what is this reserve money. When you look into the government denominations of holding currencies, this high powered money, which is termed as H, and Reserve Bank of India has defined high powered money as a combination of these three elements. So what are these? CP. CP is the currency which is held by the public. That is what is the CP. RR. RR is the currencies or the cash reserves with the bank. Now, whatever banks you see, everybody holds a cash reserves. There is a concept called as CRR and CR. Every bank holds CRR and CR. One is the cash reserve ratio. Another is the cash reserve. You might be hearing CRR very long time. What is the CRR rate right now? What is CRR? Cash reserve ratio?
4%.
So earlier it was just last Monetary Policy Committee when it saw the cash reserve ratio, it was 3%. Now it has increased. During the pandemic, cash reserve ratio was reduced by 100 basis points. Why? Because again, economy has come back to normalcy. So when economy will come back to normalcy, the CRR rate will increase. So this cash reserve ratio is what? It is a mandatory for all the commercial banks. Like all the commercial banks, it is compulsory that they should maintain at least 4% of their reserves in the form of cash. With whom? With RBI. That is what is cash reserve ratio. Suppose SBI has an amount of total fund of say 100k crores. So what will SBI do? SBI will maintain 4% of 100k crores with whom? RBI. That will be the cash reserve ratio. Whereas Yes Bank has say 20k crore as its total volume. So what will Yes Bank do? Yes Bank will maintain 4% of 20k with RBI. So whatever are their total funds, they will be maintaining. This 4% does not change. This 4% which fixed for all the commercial bank. But 4% of what? 4% of the total volumes which the bank has over a financial year, or if it is taken for a quarterly basis during that quarter, because CRR, MPC, that is your monetary policy committee, regularly it reviews and it changes the rates when it is required. And how does it changes the rate? It changes the rate depending upon what kind of economic scenario the country is going through. As you know that last 2 years after the COVID has emerged, the cash reserve ratio, interest rates, everything were pulled down. Why? Because you wanted the economy to infuse more money into the system. So you used a very lenient policy. Using lenient policy means reducing the rates, the CRR rates. Because when you are reducing the CRR rates, don't you think that the commercial bank will have more funds for lending? But if I increase the CRR rates from 4% to say 10%, what will be the impact? Do you think that commercial bank will have less amount, less funds to lend?
Yes,
So that is how the CRR is decided to be fixed up. Is it clear? So CRR is a mandatory for all the banks, and this is a kind of cash reserves. Coming to CR. So what is cash reserves? So cash reserves is the reserve which is maintained with the commercial bank itself. The cash reserve is the reserve which is maintained with the commercial bank. Every commercial bank maintains their reserves. And why reserves are essentially required to be maintained? In a vehicle, you have reserve. In a car, you have reserve. What is the purpose of a reserve? Why do people keep reserve?
Ma'am, in case of emergency, they can manage something with that funding.
Exactly. In case of any credit crunch, they can use that reserve, isn't it? So that is what is cash reserve. Cash reserve is maintained with the bank itself, and the ratio it is a variable component. Why it is a variable component? Because it depends upon the bank. SBI अपने पास कितना reserve रखेगा, ICICI कितना reserve रखेगा. So it is something which is variable. But cash reserve ratio, this one is fixed.
Fixed.
This is the difference between CRR and CR. Okay. So now you got what does this RR means? Cash reserves of the currency which are held with the banks. Clear? Now the third component is, yes.
Ma'am, why the cash reserves are maintained with the RBI means what is the impact? Why they reserve actually?
Well, I will talk to you about this in the monetary policy. This CRR is a very important instrument of RBI. See, abhi to CRR rate you are seeing as 4% or 5% between. There was a time, I'm talking about pre-liberalization, where the economy was not having enough money supply. At that time, RBI has maintained the CRR rate to be 40%. Can you imagine? 40%, 50% was the CRR rate. Why it was maintaining? It was maintaining because the economy didn't have any money. So where will RBI get money? It increased the CRR rate. So RBI took money from the commercial banks. So that is why what happened, the lending ability of the commercial bank reduced during that time. If you compare between this time zone and the previous time zone, the multiplier impact was very less. Why it was very less? Because the capacity to lend, अगर RBI 40% एक suppose SBI का 40% रख देगा, so hundreds का 40%, that means how much SBI will have the lending capacity? Only 60.
60.
But if it is now 4%, what will be the lending capacity?
96.
96.
So where the money multiplier will be more? When the SBI has a capacity of lending 60 or when it has a capacity of lending 96?
96.
96, na? So that is what the difference. Significantly post liberalization, slowly when economy opened up trade, money started coming into the system through trade. So the reliance upon commercial bank reduced. So as a result, धीरे धीरे क्या हुआ, CRR rate भी घटने लगा. Now, if you want money to be circulated, earlier that thinking was not there into the system. Earlier, if you will see the mentality, it was all about depositing. People thought that if I have high degree of deposit, it is good. But now what do you see the change? Any form of deposit is discouraged. Why? Because you don't want money to be as a stock.
Blocked.
Money should flow. Money should have a circular. As quickly money will flow, higher will be the money multiplier effect. So that is what is the CRR concept is. Cash reserve ratio is a very essential tool of RBI in order to maintain the reserves in the form of cash. Right? So these are all coming under RR. Excess reserves. What is this excess reserves? Any idea? Okay, before citing this, are you aware about the instance, though not very recent, but yes, Urjit Patel tenure was just 2.5 years back. Raghuram Rajan beforehand. So what was the dilemma? What was the controversy due to which Urjit Patel and earlier Raghuram Rajan, they resigned from the post of governor? Didn't want it. Do you have any idea? The reason was due to the excess reserves. What is this excess reserves? Simple way. Excess reserves is the total reserves minus the required reserves. Suppose if in an economy the total reserve is 100, but the required reserve, suppose a bank, the required reserve for sustenance is say 20 or is say 40. So whatever is remaining 60, that will be what? 60 is the excess reserves is kept with RBI. And this excess reserves, don't get mistaken, this is not a part of CRR. CRR and CRR are different. This excess reserves is completely over and above the required reserves. Required reserves means for my economy, certain amount of reserves are needed, isn't it? For looking after all my transactions. But if certain amount is remaining, that will go as my excess reserves. So RBI के पास कुछ तो excess reserves है for sustenance. Yes.
Yes, ma'am.
At that time, during a situation when Urjit Patel, they were asked to park away whatever excess reserves they had to the government. That was where the controversy started. The present government said, okay, look, whatever reserves, excess reserves, I'm not talking about reserves. Reserves is this one. Whatever excess reserves you are having, you have to give it to us. We will decide how we are going to use it. And there came to you may say that there was a insecurity or there was some kind of friction between RBI and government because RBI started losing its autonomy. When you do not have any decision upon your excess reserves, when you do not have your control on excess reserves, what is the point of being a rubber stamp power? So that is the reason which instigated Raghuram Rajan, and then followed by Urjit Patel, and they resigned. After that, now whatever excess reserves you see with RBI, maybe it is maintained with RBI, but now the autonomy of using excess reserves is not there with RBI. It is completely under the decisionship of the government. So that is what is excess reserve is. So usually banks, they maintain a certain amount of exchange reserves, right? So higher is the excess reserves. When can excess reserve will be high? Only when the required reserve is low, na?
Or
Then
that,
only it will be high.
or total reserve may be higher than the expected one.
Yes, that can be also the thing. The total reserve will be higher than the expected one, or the required reserve will be lower than that of the expected one. Then the excess reserves will be high, right? So whatever may be the case, RBI need to maintain excess reserves in order to look into its economy for the certain crisis, for certain emergencies. So RBI and government.
Ma'am, is there any particular rate in which the excess reserve is fixed?
See, particular rate, yes, it is variable. When the economy goes, the same thing, my answer is again defining to inflation and recession. Depending upon which kind of economic scenario I am going through, my excess reserves will be maintained at that level. If my economy is down at this stage, my excess reserves, it will be increasing or reducing. That means increasing. I need more money into the system. But if my inflation, I am here at this peak, I need to take out money from the system. So if I need to take out money from the system, I need to reduce that. Isn't it? So that is how it's all depend. But usually I think it is 10 to 20%, but again, it varies. It is not fixed. It varies depending upon the business cycle, the economic scenario.
And the total reserve increase by printing the money is true.
Sorry, Yashish.
Ma'am, the total reserve will increase by the printing money. Is it true?
See, printing money is one of the strands. But again, printing money is not the only case. Slowly, I will take you through a case right now. Printing money, of course, because initially birth of money is through printing only, no? But government will print a definite amount of money. But after that, what it will do? How the money will multiply? Suppose तुमने 100 crores print करके market में you throw it. But again, 100 crores, how to multiply that 100 crores?
Circulated market.
Circulated by the bank.
It has to be circulated, no?
Yes, ma'am.
Unless and until it is circulated, and to what times? It depends upon 2 times, 4 times, 5 times, 10 times. So that is what is the money multiplier effect. What is the capacity of multiplying that money, that constant amount of money which is created? So this high powered money is nothing but to what extent whatever is coins and currencies are issued, because this is the first step now. Any economy may, where is the money coming? The first step is the currency and coins issued by the government. So this is the first step for any economy you may take. So government will send few limited amount of money into the system. Now it is the role of the market, how it will multiply that. Either it will multiply it into 2x, 3x, 5x, 10x. So that is what is the velocity of money. No? And how will you multiply that? Either you invest, in certain assets which will give more returns, or you invest in certain portfolios which will give more returns, or you look for certain kind of capital expenses which cannot be turning off in terms of the recent, but later on the multiplier impact will be more. So you look for different avenues, isn't it? You look for different sectors where the multiplier effect will be the quickest. So that is how whenever a government release, that is why we are calling them as high-powered money. High-powered money means most powerful. High-powered money is this only, because this is the basic foundation. What is, according to you, high-powered money? This is RBI definition. This is how economy works. But what is high-powered money? You will consider dollar as a high-powered money. You will consider euro as a high-powered money. No.
Foreign reserve.
Foreign reserve is a high-powered money. That is not technically termed as high-powered money. So when you say a cash reserves leads to multiple creation of demand deposits and larger expansion of money supply, then it results in what? Then it results in a multiplier impact. So is the concept of CP, RR and ER understood, everyone?
Yes, ma'am.
CP is essentially the currencies which are held by the public. Here public is not only you and me. Who is a public? Public can be an institution, public can be an organization. So whatever currencies are held with them, that is a part of CP. RR is the cash reserves, which are maintained with the banks. And ER is the excess reserves, which is maintained with RBI. Okay. So therefore, there is a specific formula of computing money multiplier, and your money multiplier is denoted as small m. This small m is different from the other m which we studied in import multiplier. If you remember our import function, it was MA plus small m by, this was the equation, and there small m was what? Marginal propensity to import. So when you are using the small m with context to import, then it is meaning is different. But here the meaning of small m is money multiplier. So again, don't get confused. See the context in which it is used. Maybe the notation are the same. Is it clear? Small m import function में और ये small m multiplier में. Don't get confused. So it is the degree to which money supply is expanded as a result of increase in high-powered money. And this is a formula. So M, which is money supply, is H into small m. So money supply will increase when the high-powered money H increases. And when the currency deposit ratio of public decreases, CRR ratio also falls. So then you will find that the money supply is increasing. Just now I stated the currency deposit ratio of the public means what? People capacity to deposit in the bank in the form of savings, it has reduced. So don't you think that the currency deposit ratio, it has declined? And if it has declined, where is the money going? The money is going into the market for investment. So the money is flowing. And if money is flowing, then it has an impact on increasing the money supply. Again, when the CRR ratio falls, so when you say that the CRR ratio, which was earlier at 40%, now it has fallen to 4%, that means is it having a positive multiplier impact or a negative implier, where the money supply or money multiplier will be more when the CRR is 40% or when the CRR is 4%?
CRR 4%, 4%.
Of course, when the CRR is 4%, the multiplier impact will be more, no? Because money is not now kept in the form of ratio with the bank. So that is what is the capacity of money supply, which will increase. So therefore, the theory of money supply, it is backed by an analysis of how money supplied by the central bank multiplies itself in the process of monetary transaction. This is what I just mentioned right now. So when we are increasing the level of monetary transaction, so therefore, in the process, what happens? The money multiplier happens. It creates a multiplier impact, and it states that the total supply of money M equals the supply of high-powered money H multiplied by the money multiplier. So M is what? Again, M here stands for the currencies which is held with the public and the demand deposits. So M is our monetary base. Do you remember? M is our monetary base, C plus DD. We started with that yesterday. H is C plus R plus E. So H is C plus R plus E. Right now we formulated. So if you are calculating, this is the derivative of the formula. So we consider the determinants of money multiplier are, one is currency to deposit ratio, which is C by DD. Reserve deposits ratio, which is R by DD. We took up C function, no? C, R, and ER. And excess reserves, that is E by DD. So if I am to compute this money multiplier formula, so M by H is equal to what? M is our monetary base, H is our high powered money. So M is, instead of M, what I can write? C plus DD. That is cash, which is in circulation, plus demand deposits. This was our fundamental equation, which we started with yesterday, no? 0. And 0 we started yesterday with C plus DD. Whole divided by H. Instead of H, what can we write?
C plus R.
C plus R plus E. Right now we have taken up what is H. Now we divided DD to both numerator and denominator. So dividing DD to both numerator and denominator, what do you get? So C by DD plus DD by DD is 1. Yes. Whole
Yes,
divided by, again, C by DD plus R by DD plus E by DD. We just divided both numerator and denominator ko, we just divided it with DD. So M by H is what? Instead of C by DD, what can you write? Is it not denoted as small c? So small c plus R whole divided by small c plus small r plus small e. So can it be written like this? C plus 1 divided by small c plus small r plus small e. So where C refers to C by DD. That means what is the currency deposit ratio? Out of the total deposits, what is the amount of currencies which are being kept? Suppose the currency deposit ratio is say 1:2. What does that mean? What does 1:2 mean? Hello, anyone? This is again mathematics, simple mathematics. What does 1:2 mean?
If currency is 1, then deposit is 2.
Deposit has to be double of currency.
Double of
Deposit
currency.
is a double of the currency. No, it's reserve deposit ratio. Suppose reserve deposit ratio is 1:3. That means you are maintaining one part for the reserves. Excess reserve ratio is say 1:2. That means again 50% is on maintained for excess reserve. 1/2 matlab kya? What is 1/2?
50%.
50%.
50%, no? So that is how you technically define it. So in that sense, now what is the formula? M by H is equal to this, or capital M will be C plus 1 divided by C plus R plus E multiplied by H. Or M is equal to, is it not the formula derived? So small m into H. So what is small m? Small m is our money multiplier. So money multiplier is C plus 1 divided by C plus R plus E. So if in the problem you are asked to find out money multiplier and you have been given with the ratios value, can you not find out by alternatively using the formula? If you know that the formula of money multiplier is what? What is the formula of money multiplier? M divided by H. So if you have the value, say suppose you have been given with C value of 200, DD value of 100, and in case of H, high powered money, again I'm further dividing high powered money into C, which is 10% of, let's take the M value. So if C is 10% of N value, what will be the C value here? Can anyone tell me? What is capital M? Capital M is C plus DD, na? Capital M is C plus DD. So 300. Yes.
30.
Hello. So what is 10% of 30?
10% of 300, na? 30.
Sorry, 10% of 300. So the
30.
value of C is 30, na?
Yes, ma'am.
So
Yes, ma'am.
H ka component one is C, दूसरा component is R. Suppose R value is given as 50 and third component is ER. ER is suppose given as 20. So with this information, can you find out the multiplier impact? What is small m? Please calculate with this data. So capital M is 300 because capital M is C plus DD. H is given as C, which is the cash reserves, 10% of M.
Ma'am, 3.
R is 50, ER is 20. So what is M?
Ma'am, 3.
3. So what does that mean?
Means it's
What does 3
multiplying.
mean? That is it not showing a multiplier impact?
Yes.
So 3 is the multiplier impact of the currency, which is that means the currency is circulating by 3 times from the monetary base, because we have started with M0. Similarly, अगर M0 के बदले अगर M4 का value दिया जाएगा, can you not, where the multiplier impact will be more? When you are calculating with M or we are calculating with M4?
M4.
Of course with M4, na? So is it clear? Hello everyone, is it clear?
Yes, yes, ma'am.
It's a bit technical, but it is all based on the concepts. If I understood the concept, the calculation will be easy, and so as the interpretation. So what is the analysis which you can make? That the higher is the currency deposit ratio, the smaller will be the money multiplier. Agree or disagree? Currency deposit ratio value agar high hoga, money multiplier will be low. Now suppose if I increase the currency deposit ratio from 10 to 20, money multiplier capacity will go down, na?
Yes, ma'am.
Because I'm depositing more. Where will the money
Yes,
multiply?
Yes,
Again, the higher is the reserve deposit ratio, the lower will be the money multiplier. Agar my reserve ratio, I will increase from 10%, now I will increase the reserve ratio to 20%. Money multiplier will reduce or go up?
Reduce.
Reduce. So all of them are inversely related. So C plus R plus small e, they are inversely related ki nahi? So they are in the denominator, na? So when the formula of M is C1, C plus 1 by C plus R plus E, what does that mean? Money multiplier is inversely related to all these three. That is what is the technical meaning of a formula is. Is it not inversely related? You can work out on a numerical with the values. Take some values with currency deposit, take it as 10% or increase it to 30. See the impact. Money multiplier increasing or decreasing. Similarly with the reserve deposit. See, money multiplier is increasing or decreasing. So what is money multiplier and what role the ratios play in the determination of the value of money multiplier? Do these ratios have any value or not? Do these ratios have any contribution to money multiplier or not?
Yes, ma'am.
yes, ma'am. It
So
contributes.
that is how we can technically summarize with
Ma'am,
required
and
reserves.
the numerator C will not have any impact on M.
Numerators will it
And
will
the
have an
C-
impact, na? If this is low, this is high, na?
No, ma'am. The
If-
C on the numerator, that is 1 plus C. If that C will on the above on the numerator, which is the C which is there, if it will increase, then money multiplier will not increase, because you said it
That
is
is-
having an inverse relation.
That is in 1 plus C is again the cash reserves ratio. So it is something which 1 plus, it will be all, of course it will be more. The formula which we derived was 1 plus C here. C plus, did you say why 1 plus C we derived here? So you are saying that the numerator is C plus 1.
Yes, ma'am.
So what does the C plus 1 indicate? That is the currency deposit ratio. So if
Yes.
currency deposit ratio is more, money multiplier will be less. But here currency, यहाँ का C का value, यहाँ का C का value तो same है ना? But it is C plus 1. So C plus 1 means your numerator value will be more.
Yes, ma'am.
तो positive ही आएगा ना?
मैम मतलब डिनोमिनेटर का इम्पैक्ट ज्यादा रहेगा, so for that there will be an
So that
inverse
is why
relation
the
between-
yes, denominator impact will be more
yes,
because it has a significant impact on money multiplier. Lower is the levels of required reserves, currency ratios, again negatively related, and excess reserves. Again, this is negatively related. Isn't it? When you're saying negatively related means it is not bad. That means it is a aiding mechanism for having a multiplier impact. That means the lower is these three ratios, the higher will be the multiplier impact. But the higher is these three ratios, the lower will be the multiplier impact. That is what is the significance which you are trying to draw with the help of the money multiplier. Okay. So you can just, if you don't want to get into the derivation, directly either, because the data will be either given in this format or the data will be given in the format of m by h is equal to small m. So if you want to compute money multiplier, you can use either this formula or this formula. So m is our monetary base, h is our high powered money. So m by h is small m, which is money multiplier. So either you calculate by using this formula or this formula. Okay. Any question? Hello? Any question? Any clarification? So this, by this time, this was the discussion pertaining to the supply side. So